in the rearview mirror now. Where do we go from here? Well, joining us now to help answer that is once again Stephanie Link from The Street, Ralph Acampora joining us from Altaira, Lance Roberts from Street Talk Advisors, and Joe Bell from Schaeffer's Investment Research. Stephanie, once again, you first. Next week, what do we see?
Well, next week, everyone's going to be waiting for the non-farm payroll numbers. And as we talked about, some of the trends in the initial claims over the last several weeks have been pretty encouraging. Right. And we get the ADP number before that, too. So we'll get some jobs information. We're also going to get some manufacturing data in the PMIs as well, not only here, but globally. And I think that that's going to be very important because one of the parts of the economy that has started to heal and started to see better results has been manufacturing. So we have to see if that is going to continue. And again, of course, over this weekend, we get a lot of PMI data from China. And China data points have gotten better. Europe data points have gotten better. And so those are the areas where we've actually been putting money to work. And again, we have some cash on hand to be buying some of the cyclicals, but then also some of the defensive that have really gotten out of favor. And that's kind of our strategy.
Billy, you there?
Yeah. Oh, am I on? There we are. Ralph, last time you were with us last week, you said you wouldn't be surprised to see the Dow pull back into the 12,000 range later this year. A lot of gasps went out on that one. You still there?
Yes. Yes, I am. I just want to say something, Bill, that my concern didn't start yesterday. It didn't start last week. Right. My concern started about 3 or 4 months ago. And tell my good friend Peter to step back and look at weekly bar charts, not minute by minute or daily charts. Look at weekly. You see an awful lot of blue chip stocks are very, very heavy, Bill. And the implications are that multinational companies are saying something to us. And when I combine that observation with the emerging markets, it is not a very pretty picture. So I would take advantage of any rally to lighten up.
But again, that move would be a correction, a pretty healthy one, by the way, in the midst of what you still see as a longer-term bull market.
Oh, yes. I am a secular bull, which means, I'm looking out 4, 5, 10 years or more. But even secular bulls, Bill, have bear markets, and this could be a pretty difficult period.
Lance, do you think that we can buck history? We can throw history to the winds, and we can actually have a decent month for stocks in September?
Well, I don't know about that. One thing is, I do agree with Ralph about one thing. You do have to look at weekly charts. And for the first time this year, we've actually got a weekly sell signal on the markets in the short term, which suggests, history suggests that this could lead to lower prices over the next month to month and a half. So I think it is important. You could probably see this market on the S&P 500 test closer to 1,500. So, I think it's reasonable to take profits on rallies. You're below resistance right now, which is going to be important coming up over the next few weeks. Plus, you've got, economically speaking, we've got the debt ceiling debate coming up. We've got rising interest rates, which slows the mainstream economy. And then, of course, looking fundamentally, earnings are deteriorating and getting weaker here. So there's a lot of the drivers you've had earlier this year are kind of dissipating at the moment, and stocks are overvalued and extended. So a deeper correction here would provide a much better buying opportunity than trying to buy here.
But, Joe Bell, you think with the 5% move we've seen in the Dow so far to the downside, that may be it. You're looking for new highs by the end of the year, are you?
I definitely do. We talk about the large caps. Those have definitely deteriorated. But I think the thing we also need to pay attention to is the small cap sector. That has held up quite well. And when you look at the outperformance versus the Dow the past 2 months, we look at the magnitude. We did a little study recently. Looking back to 2000, this type of outperformance has only happened about 14 times. One of the notable times was back in April 2009, right after the March 2009 bottom. The most interesting part, when we looked out going 3 months, Dow actually outperformed, so it kind of hammers home that small caps perhaps leading now, but maybe we'll see a little bit of large cap catching up in September, and so many people perhaps calling for that poor performance in September. Kind of reminds me of back in May when so many people were talking about sell in May and go away, and we had that surprise May rally. I think we could be in store for something like that in September as well.
What about that, Ralph?
No, I'm sorry. I totally disagree. You cannot turn your back on large cap stocks. Ultimately, they dictate. And yes, you do have a period of time here where the small caps and mid caps are doing well. But honestly, if IBM and McDonald's and Google all start breaking down, they will follow through on the downside. Where I do agree is that in any kind of a pullback that we're all talking about, it's the sectors and groups that get down the least. And I would suspect that small and mid cap will not get as badly damaged as large cap. And therefore, you want to be in small and mid cap later on. But near term, don't fight Papa Dow.
There's one thing about that, too.
Okay, well, let me ask you, Stephanie, as well, something that Lance brought up, that, technically speaking, we could test to the downside 1,500 on the S&P and that we're looking overextended and overvalued. What do you think about that comment?
Well, as I said earlier, I think down 5% from the peak. We're starting to discount some of this stuff. Certainly not Syria, because we don't know how that's going to play out.
Sure.
But the Fed tapering is probably starting to be baked in the cake, right, in terms of them probably doing something. It's going to likely do...
You don't think a nervous market on the back of a potential strike on Syria would make the Fed rethink a September taper?
Well, they might, but I think what they're looking at inflation and they're looking at jobs. And if jobs come in better than expected next week, I think they're going to do something, but they'll do something small. But, Mandy, it doesn't necessarily mean they're taking it all away at once. It's still going to be accommodative. Now, to me, the tell is going to be how do financials trade. Mm-hmm. Those have been the leaders, and for the last month, they have actually been one of the lagging sectors. Can they regain leadership? And if that's the case, I think the market can regain leadership, but that's not one of the keys that I'm keeping an eye out for.
Keep an eye on the financials. Stephanie, and to the rest of the crew, thank you very much for joining us today.